Hey guys, today we are gonna take a look at Home Depot's first quarter of 2019 earnings. I took a look already at their 10Q report, at their earnings information that they posted on their on their investors website, and I also took a read on their earnings call transcript because I like to hear what these CEOs and top dogs of the companies have to say about their previous quarter. So let's begin and let's get started off the bat. So this is pretty infographic that they posted on their investors website, and here we can pretty much get a lowdown of what's happening with the company, and we can see here that sales has increased 5.7%. Here we're taking a look at sales have increased 5.7% compared to quarter one 2018. It is good to note that quarter one of 2018 was a 14 week period, and this quarter was a 13-week period. So when they did compare the sales, they did 2 to 14, so they can only have 13 weeks as well. Comp sales overall, comparable sales have increased 2.5%. US comp sales, US comparable sales have increased 3%, and diluted earnings per share has increased 9.1%. So this is some great news, right? Company is having a great quarter compared to same time last year. Here we can see they're definitely planning on this interconnect with digital. So online sales have increased by 23% growth. Again, they are definitely, everybody's pushing out these online investments, and it's working out for all these companies, right? We can see here 23% increase on online sales compared to same performance same quarter last year. And just to so you know that they're inline, their brick and mortar stores are still doing good. 54% of those online orders were still picked up in stores, so the customer still comes to the store. They are having pro initiatives with their they're having a business to business website, which I'll talk about all this information later on, but just giving you guys a quick overview of what's to come. Tool rental, they're expanding their tool rental, and that's definitely a great thing. Store initiatives, they're improving the way checkout times to go faster, increasing their associates information, same day, next day delivery as well. And coming up next quarter in 2019, we're seeing this new DeWalt Atomic 20-volt compact series. Not a huge tool guy myself, but for the business to business, they did mention that this is definitely something that's gonna be good for them, and that's why they mentioned it. They do have Memorial Day, Father's Day, and 4th of July sale coming up this quarter two. So again, something to keep in mind of, right? So those are definitely big holidays here in the United States. Memorial Day, Father's Day, and July 4th, all big grilling events, and all during the time where the winter states are nice and warm for a lot of barbecuing, a lot of grilling, a lot of in-home projects, outdoor gardening. So this is definitely a great thing. And we can see department trends, right? Department trends above company average. They have appliances, indoor garden, decor storage, tools, outdoor gardens, building materials, plumbing, and hardware. So we can see the American people. I mean, just overall, most of these sales are in the US. They do have international, but US is still a huge base on this company's sales, and we can see they're still buying dramatically amount of products. So just basic info, like I mentioned, right? Reported sales, so revenue was 26.4 billion for this quarter, and it was up 5.7% compared to last quarter same year. So they're definitely increasing. That's definitely good news. Net earnings for the first quarter were 2.5 billion, or $2.27 per diluted share, compared to $2.08 for last quarter per diluted share for the same period in 2008. So that's an increase of 9.1%. Again, this is great news, great numbers increase for the company. The company reaffirmed its 2019 52-week year compared to 2008. A 53-week year. So remember, last year 2018 was a 53-week year, while this year is going to be a 52-week. And they expect sales to grow 3.3% between comparable sales. And comparable sales when they compare 53 weeks to 52 weeks, right? But if you compare the 52 weeks to 52 weeks, it would be up 5%. So definitely a big growth, definitely a nice amount of growth for the company. And again, the company affirms its earnings per share growth for the year and expects earnings per share growth by about 3.1% compared to 2018, and that's about $10 earnings per share. So again, these are great numbers, and it's a good thing that they're still reaffirming these numbers, right? But I'm not having high hopes at the moment, and you guys will see in a bit. All right, so now we're going to take a look at revenue by region. Like I mentioned, United States is a huge portion of the company, but they do have some sales outside of the company. Internationally, it seems they're just in Mexico, and Mexico posted another quarter of positive comparable sales in local currency, while Canada's were slightly negative. So it seems internationally they're just in south of US and north of US, in Mexico and Canada. And here we can see out of that $26 billion of revenue, 24.5 came from the United States. So that's definitely over 90% of the sales come from United States. Only 2 billion, so yeah, less than 10%, a lot less than 10%, about 8% comes from outside the US. And here we can see where the growth mainly came from, and it mainly came from the United States. If we take a look at net sales from outside the US compared to last quarter had $1.9 billion. This year has $1.92 billion outside the US, right? So that's almost no increase in real value. Another good thing to note, right, is we are talking about a 53-week period compared to a 52-week period now. So it's definitely good that net sales are still higher, even though this is a lower time frame. But here we can see it was about a $1.5 billion increase in the net sales in the US, and that's where the majority of the net sales increase came from. And then here we also divided revenue by services. So they have two services. They either have products or services. Products are their overall tools. Services, are like when they come install your house, your garage door, or stuff like that. But we can see products are the one increasing mainly their revenue, right? So products last quarter was 23.7 billion. This year was 25.2 billion dollars. So they're definitely selling more tools, either at a higher price, and as we saw, higher comparable sales. So they are increasing the amount of items being sold. They are also their services has decreased by about 0.05 billion dollars, so $50 million. And again, that's not bad. It seems to be it's definitely less than 7% of the revenue. So it's not a big hit for them to be losing that little bit of money there. Now we have revenue by products. Revenue by products, they sell it. I want to break it down again so you guys understand. They determine these products into three different types: building materials, decor, and hardlines. So building materials include building materials, electrical lighting, lumber, millwork, and plumbing. Decor includes appliances, decor storage, flooring, kitchen and bath, and paint. And hardlines includes hardware, indoor garden, outdoor garden, and tools. And right here we can see building materials. Building materials over the past quarter to quarter has not increased that much. Same quarter last year was 9.3 billion. This year was 9.4 billion. So an increase of $80 million. Again, that's not a huge number. And we can see that building materials has lumber in there, and lumber is having a slumber right now where it's dropping prices dramatically. And I can see why building materials has been taking a hit. We are going to talk about that the slumber lumber in a bit, and how it's affecting the company and how it might affect the company in the future. Decor has had a nice jump of about $300 million. Again, that's a nice amount of money. And we can see decor has that appliances, flooring, kitchen, bath, and storage. And hardlines has taken a huge jump of about $1 billion. And that's where a majority of this company's growth has come from. And this hardlines includes hardware, indoor garden, outdoor garden, and tools. So a lot of people are definitely working on their hardware and their tools and their indoor garden and outdoor garden. here we can see they did mention that throughout the information, they mentioned that comparable sales in appliances, indoor garden, decor tools, outdoor gardening, building materials, plumbing, and hardware were above the company average. So we can see that these are items, if I'm looking at these items, these are items that everyday users are doing to improve their homes, but not doing like heavy building materials. Paint and kitchen bath were positive, but were below the company average. Millwork and flooring were slightly negative, in large part due to hurricane overlap. So we're going to talk about the hurricanes and this wet season that has also affected this first quarter. Lighting departments reported a low single-digit negative comparison of sales due primarily to light bulbs. So it seems light bulbs are slacking right now. I can't understand why, but here they are definitely not selling their light bulbs. So just a quick thing, they're doing a switch on some of their top dog personnel. Caro, who used to be the CFO and the EVP of the corporate service, is retiring on August 31st, and that's after 24 years of services. Richard McPhail, who will be, oh man, McPhail, I don't like that name, right? McPhail, hopefully he doesn't fail for us. He will become the CFO in September. And just so you guys know, I did a quick research on him. He is currently the Senior Vice President of Finance. So that's a great thing, right? I like when they shift with someone inside the company, someone that knows the company. And this guy was the Senior Vice President of Finance and is currently the Senior Vice President. So he understands what's going on in the company, and he's able to mix with the other leaders, because that's a great thing when all the leaders are on the same plan. And usually when they're inside the same company, they are usually in the same goal plan, which helps produce better results. The bad news. So here there's definitely some bad news. It's not all good news for Home Depot. So sales performance came in below average expectations in the quarter, and this is because of two factors. The first is the month of February was the second wettest on record for the US. Wet weather in February also had a significant impact to their big ticket performance in the quarter, as big ticket comparable sales were flat in the month of February. So they did mention in the month of February, I think they have 19 sections in the US regions. During the February, due to the wet seasons, I think like 17 out of those 19 regions were on the red. Eventually they did become on the green, but they can see that that wettest record on February did make a hardship on their sales. The second is the lumber slumber I'm talking about. This lumber prices continue to decline in the quarter, and it resulted in a negative impact of $200 million for this quarter. So again, that's a big value, big number. And if this lumber slumber continues to happen, it does not look good for Home Depot at the moment, just in regards for the short outlook. So looking at the results geographically, all of the U.S. divisions posted positive comparable sales. 2 of their 19 U.S. regions posted mid-single digits negative comp sales as they faced difficulty due to hurricane-related sales a year ago. So unfortunately, right, but not unfortunately, last year there were a few hurricanes that hit the few states, and it obviously increased the sales going on in Home Depot. They did not have any big hurricanes so far compared to same quarter last year, so those sales did not happen to recome. Pro customers. So pro customers, these are their business customers, the one that purchased in bulk, and they are investing in Standpoint in their pro customers, which again, they outpace the do-it-yourself customers in the quarter. So these are the customers that are producing the most revenue for the company. So obviously they are gonna get the preference on how to improve their store, right? Since those are the people doing most of the buying, they have to make sure these customers keep on coming. So pros are telling them that they are busier than ever. They continue to make traction with investment in other capabilities like tool rental. So tool rental, if you remember the infographic I showed you earlier, this is something they want to improve. They know that 90% of pros rent tools, but several years ago, only 1 out of 10 pros rented from Home Depot. Today, about 1 out of 4 rent out of Home Depot. So that's a huge number. They are definitely gaining shares from there, and that is definitely really good to see. But we can see there still remains opportunity for further growth. 1 out of 4 is not a bad number. I don't know how much better it can get. Maybe 1 out of 3, but 1 out of 2 I would say is pretty a pretty high number to try to reach. But 1 out of 4 is good, and they're still increasing. They continue to onboard investments here, so they're making this new business to business website experience. And right now they this quarter they added 35,000 customers for a total of 135,000 customers. The plan is to board over 1 million customers by the end of the year. Unfortunately, that to me seems like a high number to try to get. They're currently at 135,000, and they only grew 35,000 last quarter. But unfortunately, I don't know if that website was on beta mode or it was still pretty new that other customers don't know. So for me right now, based on this number, quarter 1 over, and they only raised 35,000 for a total of 135,000. The plan is to board over a 1 million customers. Seems a little hard to reach, but we'll take a look at that in quarter 2. So that's something I'm gonna keep an eye out for in the previous quarters. So they, besides investing in pro customers, right, they're also investing in regular customers. Obviously, regular customers are your do-it-yourself customers, people like me that go to Home Depot to purchase stuff. And they are trying to do this by both investing in the physical store and the digital companies. And they are mentioning that both physical and digital are returning solid returns. Again, like I mentioned, approximately 54% of online US orders were picked up in store during the quarter. And that's a testament that the customers that their interconnected strategy of online and brick and mortar joining together is a good idea. I mean, customers are still coming to the store, and obviously if they forgot to order something online, now that they're there already, they're gonna purchase some more stuff. So to get them into the store is a great idea for these types of customers. Online traffic growth was healthy and increased 23% for the first quarter of 2019. That was a typo. It's not supposed to say 18. It's supposed to say 19. I'll fix it for later on. They are investing in new online categories experience that makes it easier for customers to shop their full project needs online. They want to take the friction away from the process. They don't want to make it difficult. Obviously, us customers, we don't want things to be difficult. We want things to be pretty easy. So they are trying to make it easier, to make it minimal clips for our customers, for us, the customers, to get the items we need. Again, this is definitely great that they are investing in both their pro customers and their customers in the rental and in rental expeditions. So they continue to invest more in customers, and these are things that I think are definitely good to know to understand the overall use of the company. So they are continuing to roll out automated lockers, streamlining customer service desk, and simplifying tools for associates. So what does this do? This has translated to reduce wait times and increase customer satisfaction. So this is actually pretty true, right? I mean, I don't go to Home Depot that often. Home Depot is usually pretty packed when it looks at the parking spot, but when I'm there waiting in line, the checkout times seem to go pretty fast, and I tend to use more of the automated self checkout, and that still goes pretty easily compared to other stores. So that's definitely a great thing. And here they have taken customer service scores and checkout time certifications have increased by 500 basis points compared to last year. I'm pretty sure that's about 5%. I think 100 basis point is 1%. They have hired, I don't know if this number is incorrect, but this is what I got from their report, 80,000 new associates for spring. That's a huge amount of workforce hired for the spring. Obviously in spring, they have a lot more gardening and stuff of this nature. So this could make sense, but 80,000 seems like a huge number. And for the associates, they are having new mobile training solutions, which they call Pocket Guide, and they have product knowledge at their fingertips to help them get up to speedy and quickly information. So right, I as a customer don't know anything about the tools I want to buy, but because of this Pocket Guide, the associates will be able to help me out with what I need. So again, this is definitely good. They are trying to make it easier for the customers, and also easier for the associate to learn about the tools and what they're selling. So again, this is pretty great news in my opinion for where the company is heading. So now we'll talk about future quarters. They are trying to expand their online assortments in categories like auto, pool, and workwear, natural extensions to their in-store assortments. So for some reason, I'm not sure how I like this increase in the auto categories. I don't understand why Home Depot needs to expand more dramatically. They should just go forward with what they're strong with. But they did mention that they are doing great sales with that WeatherTech mats on autos. So we'll take a look. And the great thing is they're only doing it online and not in the store at the moment, which I guess is it's okay. They're testing it out before they roll it out to the in stores. But I mean, it's not bad to do experiments like this, right? They need to see what type of market they can try to grab right now. But remember, at the same time, I think for Home Depot, in my opinion, right, this is just my opinion, for them to increase dramatically, try to spread their wings too far is always a bad thing. During the second quarter, like we mentioned, we will have Memorial Day, Father's Day, and 4th of July events. In the first quarter, they did purchase $1.25 billion, $1.25 billion of shares, which would equal to about $6.5 million, or 6.5 million shares. They still have about $4 billion to purchase for this year. So they still have a lot of money to buy back more shares. So they are going to continue to do that at the moment. So now remember, guys, I talked about that lumber slumber. So I just want to give you guys some actual numbers that they recommend. They gave us this example in their, I think it was in their earnings call. And again, not many people listen to their earnings call, so they will not know this. They will not find out this information. But at the price peak of lumber last year, a 4x8 sheet was selling for about $17. At the same time, this quarter, it has dropped. That same sheet, the exact same sheet, has dropped over 50% to about $8. So from $17 to about $8. That's a huge decrease in price in lumber. And like, remember, I mentioned it earlier in one of my slides. Lumber this quarter costed the company about $200 million. That's not a number to joke around with. And if lumber prices remain at today's level, this could hamper their 2019 sales growth plans by as much as $800 million. So that's if the price remains at today's level. It can drop. It can destroy their sales growth plan by $800 million. Imagine if lumber continues to drop, how much more it can increase that to almost $1 billion. We don't know how low lumber would go. So it's a good thing to let's keep an eye at lumber, guys. So I want you guys to also keep an eye on lumber before next quarter 2, so we can see what's happening. But right now they're saying it's too early to make any decisions, so they're not changing their affirmation on their growth plan for 2019. But let's take a look what that $800 million would do. So for fiscal 2019, they expect an increase of approximately 5% when they calculate a 52-week basis. They expect sales to increase by 3.3%, reflecting to compare to the full 53-week of last year. So last year they made $108.2 billion. Now let's multiply that by that 3.3%, and that's going to give us $111.77 billion. With slumber in lumber. Wow, this is definitely a tongue twister for me. With slumber and lumber, this can make this 3.3 growth that they're saying they're gonna get, and drop it down to 2.5% growth. So it's definitely a good thing to keep an eye on lumber, because this can definitely affect this sales growth. And if they change what they're about to, if they change their growth plan midway, can definitely have negative effects on the stock. So for me, this is something I'm gonna keep an eye on. And if I see lumber dropping even more, this might be bad news for Home Depot in the short term, right? I mean, at the same time, lumber is not a big factor in the whole company as a whole. But when they say they're gonna do about 3.3% increase in sales growth, and they only do 2.5%, investors see this as a bad thing and will definitely heckle the stock. So that's it. That's all I got for you guys right now, right? Tomorrow's episode, we'll take a look at their numbers so we can see a better look of how year or quarter after quarter the company is doing. We're also going to take a look at their assets, their liabilities. So make sure to subscribe, guys, to take a look at those episodes, at that episode coming up. So I hope you guys enjoy it. See you next time and take care.